Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. We're going to be taking a look at what happened last week, December 5th to the 12th. We're going to be taking a look at what happened in the luxury market, the Manhattan market, and the Brooklyn market. But before we get started, I just want to remind you that if you have any questions about anything in this report or any questions about the real estate market in general in New York City, please post those below. Also, feel free to subscribe to my channel if you find this kind of information to be helpful to you. And as always, feel free to share these videos if you think they'd be helpful to someone else. We're going to get started, as we always do, with the luxury market. There were 21 contracts signed last week. This is for properties priced at $4 million and above, and this is 7 more than the previous week. Condos outsold co-ops 14-3, and there were 4 townhouses in this mix. The number 1 contract was a townhouse at 276 West 11th Street. It was asking almost $17 million, and it was listed in September. It is a 25-foot wide 3-story red brick house. It has about 5,200 square feet, and it's been divided into 5 one-bedroom apartments. Really interesting story about this property. The same family has owned this property since 1924. There were a lot of developers who were circling this property, but ultimately it was a buyer from England who prevailed, who's purchasing this property and planning to turn it into a single-family home. The number 2 contract was 41AB at 23 East 23rd Street. It was asking almost $13 million, and it was listed in March. The condo has 3,300 square feet. It includes 4 bedrooms and 4 bathrooms, 11-foot ceilings, views of Madison Square Park, the city, and the Hudson River. The amenities in the building, which is known as One Madison, feature a fitness room, a pool, a lounge, a children's playroom, and a screening room. If we take a look at the stats for last week, we can see the total weekly asking price sales volume, $176,485,000. The average asking price, $8,404,048. The median asking price, $7.2 million, and the average discount from original ask to last asking price, 7%, average days on the market, 428. Okay, that's it for the luxury market for last week. If you have any questions, post them below. Now we're going to take a look at what happened in Manhattan. So what we saw last week in Manhattan, just as a kind of quick overview, is we continue to see the supply declining seasonally, we would say, because this is what we would expect this time of year. The pending sales, interestingly, are kind of ticking closer to those 2019 levels. And we'll get into that a little bit more. But right now we're going to start by taking that 1-week look at the market, from the supply to the contract signed, to the off-market, and that market pulse. We see the supply was 147 for the week, down about 41%. The contract signed 136, down almost 12%. Off-market properties up a little over 5% at 338. We continue to see that we are in this buyer's market, but as you'll see from not this chart that I'm going to share with you now, but the next one, we are barely in that buyer's market. So let's take a look now at the 1-month chart. We see the supply 757. That is down almost 50%. Again, this is seasonal. We would expect to see this. Contracts signed down almost 19%, 607. Off-market properties up almost 25%, 1,102. Again, we are in that buyer's market territory, but take a look at this market pulse chart and look at how we're seeing this little rise at the tail end, meaning kind of right where we are right now, it would really strongly suggest that we have leveled off and that things are starting to be on the rise, and we're almost into that neutral market in Manhattan. So buyers, this is your cue. If you want to get something done, I would not wait too long. Now you see these more detailed charts, the supply, the pending sales, days on market, monthly new supply, price per square foot. This kind of detailed information is extremely helpful. And if you are curious about any particular aspect of what's going on in the market, take a look at those charts and let me know if you have any questions about them. If you take a look at the chart for the supply, you can see, as I said, that the Manhattan inventory is kind of fading in this kind of seasonal way as we head into the end of 2022. This is helping actually to keep the market in check. If you look at the demand, and after we entered 2022 at the highest level for January in over 10 years, interestingly, the pending sales will likely close the year at the lowest levels for December in over 10 years. New listings, weekly new listings remain kind of in line with these lower levels for this time of year, nothing really too earth-shaking in terms of new listings. And the contracts signed have ticked up a little bit, but overall they remain kind of lackluster compared to prior years when we saw kind of scrambling towards the end of the year for buyers wanting to get deals done. If we take a look at the market in 3 charts, we see that prices have ticked lower, but they remain stickier than many buyers expected, given the shift in both market sentiment and contract signed volume. All right, that is it for Manhattan. Now we're going to shift over. We're going to take a look at what happened last week in Brooklyn. So, as we've been saying, Brooklyn has remained in a kind of a neutral market. We've said Brooklyn has been the more robust of the 2 markets if we're comparing Manhattan and Brooklyn. We're going to start with Brooklyn by taking a 1-week look at the supply and the contract signed. And we're going to take a look and see where we're at in Brooklyn for the last week. The supply is 115. That is down a little over 23%. Contract signed 111. That's down almost 19%. Off-market properties also down 104. We continue to stay in this kind of neutral market in Brooklyn. If we now take a look at the 1-month view, we see the supply of 532. That is down a little over 40%, not unusual to be seeing that this time of year. Contracts signed down about 8%, 460. Off market, that's up, not a lot, 8%, 391 again. We continue to remain in this kind of neutral market in Brooklyn. If you take a look at the chart, you'll see since October, towards the end of October, all through November and right into December, we continue to kind of bounce along in this neutral territory, and we'll likely finish the year the same way. Here are those detailed charts for Brooklyn: the supply, the pending sales, the price per square foot, the monthly closed sales, days on market, all the things that you might want to know about what's happening in the Brooklyn market for the last week. So if we take a look at this chart for the supply for Brooklyn, we see that there are almost 3,200 properties on the market in Brooklyn. That is down 1.8% year to date, 7.2% from last month, and almost 13% from last year. And if we look at the pending sales for Brooklyn, that's about 1,800 properties, 1,807. That is down almost 33% year to date, 7% from last month, and down 35% from last year. And we're going to take a look now at the monthly contract activity for Brooklyn. We can see for November, 490 contracts were signed at all price points, all property types in Brooklyn. That is down not quite 1% from the previous month, and it's down almost 41% from last year. If you look at the historical averages, that's quite interesting. Average is 637 for November, and we see that Brooklyn didn't even break 500 for the month of November. So as I've said, this has been a pretty lackluster fall market. We did see a nice rebound in contract activity. We are leveling off, or so the data would suggest. We know that the biggest adjustment in prices happened over the summer, June, July, August. We're still waiting for the data for September, October, and November. If we look at the data at this point, we seem to have leveled off. We seem to have stabilized. It hasn't been the most amazing fall market, but it's been steady and perhaps more resilient than anybody thought it might be. Essentially, where we are at now is where we were at the end of 2019, when the prices had adjusted over 2018, 2019. By the end of 2019, we were stabilized. We were heading into 2020 with buyers and sellers in alignment. They were all on the same page. COVID happened. We went through all of that. We went through the discounts. We rebounded. We had a big flurry of activity, a lot of it at the beginning of this year. And now we seem to have leveled out. And again, now we seem to be stable and, frankly, back to where we were at the end of 2019. And maybe that's not such a bad thing. Okay. Remains to be seen what's going to happen in 2023. But of course, stay tuned because you know I'm going to be reporting on it. That's it for this week's look at the state of the New York City real estate market. I will be back next week with all the latest news on the luxury market, the Manhattan market, and the Brooklyn market. In the meantime, take care.